Let's talk about how to make money with stocks by paying close attention to investment catalysts. And Wayne Gretzky is one of my heroes, okay? And he once said that the reason he was successful is not because he skated where the puck is, but rather because he skated where the puck is going to be. I love buying broken stocks, but not broken companies. And I love buying companies where there is going to be a positive event, meaning a catalyst that's going to make investors want to buy the stock. And so when you see a broken stock, but not a broken company, and if you think there's an upcoming positive catalyst that's going to get investors excited, you need to back up the truck and buy the stock. And so one example of this was right after 9/11. I worked at Goldman Sachs, and stocks were in free fall. And there was a company, ticker TTWO, Take-Two, and they make Grand Theft Auto. And the stock was being destroyed. And the reason was because at that point in time, they released a game around 9/11, right before 9/11, that had the Twin Towers in the background. And they took the game off the market and they changed it so you didn't see the Twin Towers in the background. But I bought the stock. I backed up the truck because I knew that there's going to be a catalyst every couple of years or so when a new GTA was coming out. So another bigger example of a catalyst is a massive event like the Olympics. Now, I remember in 2008, there was the Beijing Olympics. And between 2004 and 2008, a lot of us in the hedge fund industry did well, humbly, based on stocks that were going to benefit from the Olympics. You know, and at that point in time, I remember I met with the CFO of United Technologies, which owns the Otis Elevator brand. And the CFO of United Technologies told me that in the next 5 years, more buildings are going to be built in China than the cumulative total of all buildings ever built in every country since the beginning of time. And so what China was doing is they were building up their economy to show the world, their coming out party, so to speak, for Beijing in 2008. And that was a wonderful long-term catalyst. Right? It worked out incredibly well. And that's one of the reasons why commodity prices ran up a lot. Okay, so the Olympics can always be in normal environments, maybe a little bit less so with Japan this year because of COVID. But the Olympics can usually be a great catalyst for stocks. The best kind of investments, though, are ones where there's multiple catalysts. Okay, so what I want to do is I want to talk about Lionsgate Films, ticker LGF. And I couldn't find a graphic for Lionsgate Films, so I was in Jerusalem, and the gate that you go through to enter Jerusalem is called the Lions Gate. That's why it's called Lionsgate Films. But with Lionsgate Films, and I invested in them back in 2012. Okay, and Brian Carter, one of the investors I worked with in the hedge fund industry, he was awesome. This was his idea. He's a great guy. But Lionsgate Film, they were going to release 3 or 4 movies over the next couple of years based on the Hunger Games. And so that meant there were a number of positive catalysts when LGF, ticker LGF, Lionsgate Films, released those movies. And so the bottom line is you can do extraordinarily well if you buy stocks that are out of favor, where you know that there's at least one upcoming catalyst that will cause investors to buy the stock in the future. You always want stocks that people are going to like and not just stocks that people already like.